Welcome to Learn by Choice. In this video, we are going to talk about the artificial intelligence, how it is being used in the financial industry. Artificial intelligence and machine learning, these are all the recent technology phenomenon which is being used in the finance and education and also health and also for security and surveillance industry. So there are basically 5 areas in which the AI is being used in the financial industry. Algorithmic trading, through which it analyzes the market trends and also the historical data. AI enables the faster execution of the trade. It leverages the real-time data, and in nanoseconds, and the trading is being completed. It's called the high-frequency trading. And customer engagement and also personalized service is being provided through AI. The AI is predicting the customer behavior, and it understands the preference of the customers. Since the AI is mimicking the human intelligence, it is able to provide the personalized interaction with the customers through chatbots or virtual assistants. Chatbots are conversation type of machine learning tools available for the benefit of customer service. Whereas in the case of virtual assistant, it is a little bit high-end version, which is used to perform certain tasks, routine tasks. Siri and Alexa. So these are all the examples of the virtual assistants. The AI, it's bringing the automation and efficiency. The repetitive tasks, for example, there are credit appraisal and repeated customer compliance and KYC activity. These are all the repetitive. This can be performed by the AI. Time-consuming activities also can be performed using AI. And then the risk management and fraud detection. AI analyzes the intricate patterns between various data sets. And for anti-money laundering and compliance initiatives, this AI is being used. For compliance and regulatory requirements also, this AI is being largely used. For example, acquisition of the customers, automation of the monitoring and reporting activities, and for regulatory compliance. Artificial intelligence actually it is using to predict the customer behavior using the predictive modeling. It analyzes the historical data about the customers based on the patterns and trends so that it is able to forecast the behavior of the customers. And machine learning, it is using the algorithms to learn from the data from the browsing history of any client or customer and also based on the transaction whatever is undertaking. It helps to analyze the credit worthiness of the customers, and also it is used to real-time sentiment analysis of the customer behavior. For example, based on the customer thoughts and feelings can be analyzed using these AI tools. And the natural language processing, it is the way to understand the human language. These NLPs are used to analyze various unstructured data available. For example, the social media posts and videos and text and surveys, whatever is available, which cannot be properly structured. It is being used by the AI tools to predict the customer behavior or sentiment analysis. This AI can also be used to read the customer reviews and also the chat conversations to identify the particular pattern of the customer behavior. So based on the sentiment analysis, the response can be bucketed into 3. One is whether the customer response is positive or it's negative or it's neutral. Banks are largely using this LLM. These LLMs are nothing but the large language model. These are all the AI algorithms. The neural network, for example, like it's a human brain or human neural nervous system. This is built to read, to understand the human language. Actually, these AI LLMs are self-supervised. There is no supervisors, but it's self-supervised learning technique. It is used for text generation, machine translation, and also writing of any summary reports. There are 4 broad areas banks are using these LLMs, private LLMs. These are not public, it's private, exclusively built for the banks. For seamless operations and decision making, faster decision making, security and privacy, and for customer experience. Faster decision making, it helps to bring competitive advantage to the banks. And the security and privacy, it's able to control the sensitive data. The facial recognition, it is bringing the security of the services being offered to the customers. And customer experience also improved by providing innovative services and some kind of personalized customer service also offered, intuitive customer service. And the access of the information from the website will be very easy for the customer through simple prompts, simple instructions. They can get the relevant information. And voice assistants also extensively used by the banks. So for seamless operations, the banking operations can be automated through AI. And then this large language model powered website, it provides easy information. The website normally contains a plethora of information. Through this kind of LLM, the customer can get the relevant information what they want. So Reserve Bank of India also planning to use AI and ML for its supervision. Reserve Bank of India, there are monitoring 4 category of banks or entities, institutions. Only the banks, payment banks or small finance banks or urban cooperative banks and NBFCs and credit information bureaus and local area banks. Basically, their supervisory activities to supervise the banks about the financial soundness asset quality, solvency, governance framework, liquidity and operational efficiency. AI is being used by the regulatory bodies like RBI and other regulatory bodies. There are two kinds of supervisory functions each regulator is doing. One is on-site and off-site. Trying to use the RegTech and SupTech technologies, which are basically the AI and machine learning capabilities. It analyzes or helps the banks by analyzing the real-time data which is coming from the banking entities. Tools will be used by the Reserve Bank of India for monitoring the banks or any liquidity risk, financial risk the bank is undergoing to meet its financial obligations, or market risk, any market challenges, or concentration risk, or any misconduct of the banks or mis-selling of the bank. Robo-advisors are being used for investments. Robo-advisors are nothing but the algorithms are used to build investment portfolio for the investors, analyze the financial situation of the customers, so his financial goal, along with his risk tolerance. And it's a completely digital platform and it targets these small customers. There's no human intervention. It's a low-cost advisory service, and it brings transparency. There is no bias since it's algorithm-based investment advice. And a lot of wealth startups are using this model for building wealth for their clients. And algorithm allocates and reallocates and rebalance the customers' investments for optimizing the returns on its own. There are basically three types of robo-advisors. One is the equity-based, or fund-based, or wealth-based. In equity-based, focus is on the equities and stocks, and fund-based, it's basically on the fund like exchange-traded fund. And wealth is overall considering the net worth of the client and build the suitable investment portfolio. Recently, there are a lot of fintech startups. They are using these robo-advisors, their business model for building robust investment for their clients like Scriptbox, Grow, and Quera. Your subscription will definitely motivate us to make more and more educational videos for financial literacy.